welcome to the Mortgage Minute for January 30th. That's actually the first Mortgage Minute of 2013. I apologize. Obviously, we've been busy, which is good. When they say that the housing market's slowing down, we're not seeing any of it in our market, not in our office. But let's talk about a couple of quick things. Number one, interest rates. Last week, of course, as most of you are aware, Mark Carney came out and said they're not changing rates. That's nothing new. He hasn't changed rates for almost 2 years. What is new is the language. There was a shift, and you see this. It says Carney's shift. Weak economy trumps debt fears. For the longest time, Mark Carney's been talking about the debt fears, worrying about household debt and basically threatening to raise interest rates if Canadians don't get household debt under control. Now he's saying the global economic market and the fiscal cliff in the United States is becoming a bigger issue than the concern over Canadian household debt. Therefore, they don't expect to be able to raise interest rates for until 2014. Here he is. He said, we're managing the situation. You know, basically, they're very concerned about what's going on. Here's a name to get used to, Tiff Macklin. Tiff Macklin there says outlook weak despite recent job growth. So again, who's Tiff Macklin? He's the deputy governor and probably heir apparent. Get used to that face. That's probably going to be your next Bank of Canada governor. And his outlook here is basically saying, again, because of even though there's good job growth in Canada, the global economic outlook's not looking so good. So that brings us back to housing prices. You know, we're getting inundated with headlines like this. Look at this in Maclean's magazine. Inside the great real estate crash of 2013. Well, nothing, no doom and gloom in that, eh? You know, newspapers are designed to sell headlines, sell papers, and sell magazines. And of course, rosy, hopeful headlines don't sell as much as crash and burn. Read closer, and they're talking specifically about markets like the downtown Toronto condo market, the downtown Vancouver condo market. Again, whenever you read any headline that states something as broad as the Canadian real estate market, take it with a grain of salt, because your particular market, if I could take your city where you live, there are 4 or 5 different pockets within that town, that city, that village that have different demographics, that have different numbers. And I'll share more about that in a future article. But, you know, you're going to see a lot of headlines like that. This, why house prices aren't coming back. Interestingly enough, you read this, it's a guest columnist for the Globe and Mail, Toronto-based. And again, a lot of this news out of Toronto-based media is focusing on the downtown Toronto condo market, which I agree is overheated. That doesn't mean every place in Canada is. And again, you're going to see December home prices plunge. In Vancouver, we just had all our assessments, so sea to sky properties plunge in value. Again, it's funny when we're talking about all this news when it relates to the housing prices, it's all negative, like housing prices plunge and sales are about dip and markets are going to crash. I wrote an article recently called "What's All the Fuss?" and taking a look at it again. First-time home buyers, someone looking to sell or upsize or move. You know, my question to a lot of you real estate investors, why is everybody so uptight about a drop in housing prices? Quite frankly, it could be beneficial to the majority of Canadians. And you know, we're starting to see that in the headlines. BC Housing pauses to catch its breath. You're seeing cooling of the housing market seen as healthy in Canada, and why lower prices could be good for Canadians. You know, so again, read between the lines. For every negative headline, there's another side to that story where a correction in our housing market may not necessarily be as bad as some people would have you believe. So anyways, folks, that's the Mortgage Minute for January 30th, and we'll look forward to talking to you more often as the new year progresses. Thanks, have a great day, and remember, go to peterkinch.com. If you'd like to get a copy of this article, send me an email at peter@peterkinch.com, and I'll forward you a copy of it. Thanks, have a great day.